Today's positive trading in the Dow illustrated some significant factors. One, it showed the continuation of when they broke out of this wedge formation, that our uptrend was still in progress. It was also used in the 3T line as a support level, which is a very bullish indication. As long as we stay above the T line, we're in an uptrend. As long as we stay above the 3T line, the strength of that uptrend is that much greater. Plus, you can see how today's trading took you out through a little resistance level, the high of February, indicating that wave 3 has a high probability of maintaining the same strength as wave 1. Analyzing the NASDAQ in kind of a little J-hook pattern and the doji gap up also illustrated that when it was trading positive on a day like yesterday and the Dow was trading slightly negative, it demonstrated there wasn't any mass exodus out of the market. It was just rotations from sector to sector. Today the Dow was up strong and the NASDAQ was down 3 points. What this illustrates is that money is moving from sector to sector, but not moving out of the market in general. And you can trade futures, currencies, commodities, anything, stocks, bonds. Candlestick analysis is the graphic depiction of what's going on in human nature, no matter what the trading entity. You can see the classic pattern. There's a big fry pan bottom in lean hogs. Wave 1. The pullback. Now we're in wave 3. Today the close of lean hogs was right here at this level, making the prospects of more upside in lean hogs the same magnitude as wave 1. Being able to analyze these patterns of human nature allows an investor to take advantage of big price moves and definitely being in the right direction at the right time. That same type of pattern can be illustrated in Apple. Notice as Apple came up, pulled back, this is what we call a bobble breakout, which is a more defined J-hook pattern. It failed here at the 200, but notice what they couldn't do. They couldn't close below the T-line. When it came back up through the 200, it was producing a pattern which was basically a J-hook pattern. If you took the 200-day moving average off your chart, you'd have a J-hook pattern. But the fact that you have that on your chart, like most investors around the world, when it broke through the 200, that gave you a high probability that the next wave was in progress. Once again, illustrating very clearly which direction and what the magnitude of the next move might be. That same analysis was applied to our recommendation on ANAB because it had a bobble breakout, a failure at the 200, came back to the 50, did a bullish Harami gap up. When it came through this level the second time, that told us that we had wave 3 in progress. Once again, putting us in the right direction at the right time. The visual aspects of candlestick analysis helps an investor be in the right trades at the appropriate time. As we can see in our recommendation of a couple weeks ago on BAH, we had a wave 1. Notice how the little bobble breakout occurred right here at the 50, creating the next move. The drifting came back along the T-line until we had a left-right combo with stochastics closer to the oversold area. When they gapped it open and started trading positive, it gave us multiple pieces of information. First of all, the left-right combo is a very strong reversal signal. Secondly, if it opened positive, it was confirming that very strong reversal signal. Third, it was telling us the T-line was not acting as resistance anymore. And 4, we could see what everybody else was watching, that it broke out through this little resistance level, telling us that wave 3 was probably going to be the same magnitude as wave 1. This is not rocket science. This is just having a graphic illustration of what happens in investor sentiment that the Japanese rice traders have illustrated for us for 400 years and identifying which signals and patterns produce the best trades. That'll be it. We'll see you in the chat rooms.